The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Well, we have a lot of things going on, but folks, I hope that you pay attention to what's going on here at TFNN today, because I actually had to reinstall my modem because I actually heard Basil Chapman say, be very careful up here because he's starting to see signs of a potential top. Folks, he hasn't said that since the market bottomed in March of 2009. I'm being a little bit facetious here, but he's very good at what he does, and he has a lot of experience, so pay attention to that. I see the same things, but frankly, Basil, with the stock market, he has no equal, so let's remind ourselves of that. Now, I wanted to talk just a little bit about the show from yesterday. Hopefully, our guest is going to be none other than Stan Harley at the break. Now, I wanted to post a chart here. I hope it comes up. This is one of the charts from yesterday that we had for the folks in the den that where we were doing the class, and it was to be a seller of wheat up there at that 440 and a half. The high today was 443. It's had a pretty good oh god damn it, I hate this stuff. Yeah, I'm sorry folks, I'm very tired, and when I have these technical problems, just drives me crazy. You know, I don't know, I should get back on my covered wagon and go into, in seclusion or something. Anyway, let me hopefully get this back up here a second. I don't know if the chart is up now or not. Let's see if it comes up. Anyway, there's multiple patterns up there. It's a 3-drive pattern. Anyway, we'll see how it's going on here. Oh, God. Son of a bit. I'm very close to saying we'll catch you on the flip side tomorrow, because I'm doing everything that I'm supposed to be doing, and it's not working, and I'm not very happy about this. But anyway, well, shucks. All right, let me try something else. This is not going to work, but I will try something else. It's not going to work, but I'm going to try it. Hold on. God, I had it working. I don't know what's wrong. Just prepare. Hold on just a sec. I know this ain't going to work, but we'll see. That probably doesn't work either, right? Wow. It worked? You mean I did something right? Shut the front door and raise the rent. Oh, my God, oh, my God, oh, my God. All right, wheat's broken about 10 cents from that high, so if you were in that trade, put the Basil, thank you for your show this morning. I listened to it, and when you start telling people to be careful, they flat better pay attention, folks, because you do a great job at this. Anyway, that was the wheat trade that we were doing. Now, yesterday, there's some really great charts here, folks. I hope that they come through. And if they don't, we'll try to show them another time. That's all I can tell you. But we got some really good charts from over at the UK about this, and it's all related to some of these patterns that we're watching here today. Someone in the den has just reminded me to try to remember what I just did. I wrote it down. The $64 question is, I don't even know if that's going to do any good. Folks, let's just I think I'm back to normal. I get back on here. First of all, let's take a look here. Let's talk about the news a little bit. Everything in the news is about what's going on. Let's try to see if I did it right. Did that chart on the heating oil come up? All right, that's good. All right, let's run through this here because time goes very fast. everything in the news today, or not everything, but a lot of the stuff is about the price of oil and the price of gas. Now, those of you that follow the commodity markets realize that the price of oil and the price of gas has been going down for well over 3.5 weeks. We've seen it in all these things. We've seen it in the heating oil. We've seen it in the natural gas. We've seen it in the gasoline contract. Look at gasoline, folks. Gasoline contracts are down 35 cents a gallon in the last 2.5 weeks. This is not, and yet what do they do here in Tucson? Our gas has gone from 303 to 363 during that time, because I checked to see how it is, just to see how they're moving the stuff around. So there's something not right in all of this. That's what's really amazing. So the other thing I wanted to mention just briefly here is that when we do the things that I do with trades, I keep them just as simplicity beats complexity. And so I keep it as simple. I know oscillators help, and I know moving averages help, and the guys here in the den, Basil especially, and Steve Rhodes especially, and David White somewhat, they can use these. But to me, they confuse me, so I don't use those. All I do is I look to see how much is it going to cost me to get in this. Now, yesterday in the trading session, we had a very good crowd in there, and we had a lot of fun. I went, folks, 5 hours. I took two 5-minute breaks and two 10-minute breaks in 5 hours. We went straight through. We covered a lot. We made a little bit of money, but I made some serious mistakes with the trades. I mean, there's nothing dollar-wise, but execution-wise. And the reason why I know is I had some of my students from, one from Asia and one from Switzerland. They said, hey, look, it was great. He said, but if you're going to teach. If you're going to trade. I mean, I had 4 break-even trades, 2 of them in the S&P and 2 of them in gold, that made a lot of money, but I put my stop at break-even so I wouldn't lose. I was trading like a third grader, mainly because I wanted the people to, to get their money back, which I'm sure they did. But, the problem was that I wasn't trading properly because of that, and nothing to do with being tired. I was feeling great, and that's basically it. So, but, we had a trade in the euro that was worth well over $450, got stopped out, break even, sold the S&P on the high, and I put my stop too close, got break even. I mean, it was just one after another. But if next time I do this, if I do, I'm going to spend more time with the trading and less time with the teaching, because the teaching part I love to do, but people want to see the thing in actual battle conditions, and we certainly have that. Now I've got to share with you a chart that I think you're going to really like. It comes from across the pond from our good friend Mr. TH over there, Trader Tom. Let me get this up here for 1 second, and we'll get it up here. This is very important, folks. Now this is a daily chart of the German DAX going back to late October. When we made a high up there. And then all I want you to do is look at the red lines that are there. And those are ABCD patterns, folks. That's how you come up. You can see on October 4th, you can clearly see there is a 3 drive to a bottom pattern, correct? And now you can see we have multiple ABCD patterns to the upside in the German DAX. And I'm going to show you what happened at other times when this pattern occurred. 877-927-6648.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted a chart of the German DAX. Now, it doesn't make any difference whether it could be the German DAX or natural gas, whatever it is. It's just a chart. That's all it is. It just happens to be, the German DAX. Now, here's what we need to look at. This is the German DAX from let's try it again, Larry, from 2020. And here you can see what's been going on since that time. Now, the person that did this, okay, he does a great deal of technical analysis, and he's very good with patterns and ratios. All I want to do now is I want to bring you forward and show you what's happening right now, and I'll let you determine whether there's any similarities. And as you can see here, we have a very, very strong similarity. The main difference is, if you'll notice, that the yellow box on the right is composed of a longer time frame than the one on the left. Folks, that means it's even more bearish. And the reason for that is there's more people that have been brought into the market during this time than there was during the time of 2020. Remember, we went from 2020 in the DAX, we went from 13,000 down to 7,000. So that was a drop of 50%, and very, very quickly. The signs that we're seeing, and I really enjoyed Basil's show today because I'm trying to say a big word. He elucidated. I know that's not a terrible word, but he was really showing you folks that there's a lot of stuff out there that you should start to pay attention to. Little, not nothing big yet, but little wiggles and diggles that he's seeing, and I'm seeing the same thing. The advanced decline line being one, and the momentum another, and the fact that some of the indices are not following through, like the DAX and the Dow Jones, not the DAX, but the Russell and the Dow Jones. So those are just a few of the ones that we're watching. Now, Mr. C has asked us to talk a little bit about the yellow metal, not the yellow metal, but the red metal, which is El Copper. And this is the copper state, being in Arizona. This is, if you remember, just a few days ago, we were talking about the 382 retracement, ABCD, and the copper up there at 449. And as you can see, the high was 449.5. And then we broke down yesterday below the 382 retracement of that, or the 618 retracement, that was major support. That's extremely negative, folks. That sets up an ABCD down here. If we went from 84 down to 30, so we dropped 54 cents a pound on that first leg. So if you take 50 cents a pound off of 450, we're heading to $4 a pound in copper. And as you can see, that's only 20 cents away. That's like 2 days of the action we had yesterday and stuff. So this market has given you an indication that that's what we're trying to look at. Now, yesterday we on the teaching day, whatever day it was, a trading day, I focused on that 382 probably more than anything that I had done, because I think that is probably the easiest and the best trade for anybody that's getting started in business, to learn how to do that one, because it gives you it does three things for you when you do this 382 pattern. A, it makes you trade with the trend. Okay. B, it gives you a risk reward ratio of better than 5 to 1. And C, the probability of winning is better than 7 out of 10. So you just can't get better odds than that. So that's why I was trying to do that yesterday. People got the idea. The reason why I know, folks, I've done 4 of these. Okay, on the other 3, I made a lot of money, for sometimes over $4,000 day trading on these. Yesterday, I didn't even come close to that, and yet I had more requests for information yesterday than all of the other 3 programs combined. So we must have been doing something right. But anyway, let's just move on to a couple other things. We covered that copper, and now we've got to get down to what I think is we really have to pay attention to. This is because we've had this situation here where we've been watching this euro for a great deal of time, and what I want to bring to your attention now here is the German This is the U.S. dollar index on the weekly chart. If you remember, we've been watching this unfold for quite some time up to this 96 level. Folks, we have completed that pattern. If you want to get really technical, just count the number of bars in the AB leg and count the number of bars in the CD leg, and you're going to be seeing that these things are pretty much spot on. I mean, you can't, like I keep saying, you can't make this stuff up. So let's remind ourselves that this is what we're watching here as we're going through with this. We've talked about this dollar index since Hector was a little pup, and now we've come down to the area where the euro is the one that we were watching, and I want to bring that up to your attention because something really unusual happened. Let's get this up here so you folks can see it. This is the same chart upside down. This is the euro versus the U.S. dollar. The euro is 53% of the dollar index, so it's heavily influenced, okay? Now, we had a perfect signal there at 113, but what happened at that time, just as it was going on, a report came out of Asia, and believe it or not, folks, the euro dropped 40 points in a matter of about 3 minutes, and we had our stop in there with 20 points, and we were stopped out. The market immediately snapped back and basically took all that bearish news and shook it off. But that was one of those situations where our timing was perfect. Our stop placement was perfect because we don't like to risk more than 20 or 30 points, and it went 40 points lower. But after it rallied up, it pulled back to guess where, folks? A 382 retracement, and now it's got a 40-point profit in it if you were able to do that. Now, Mr. Z is saying is the bottom, 419 is the low. It could be, Mr. Z, but I have to go with the ABCD there at $4. And the reason why is look what happened after the 382 was made. See, this thing came down like a rocket. I mean, this is this is a SpaceX deal. This thing it's got a lot of power to the downside. It might hold 418, and I stand corrected because I stand corrected a lot. And sometimes, like today, I'm even setting down and corrected. So that's what I'm looking at. I think it's heading to $4 a pound, and we'll see it. But remember, I'm looking at a lot of different things. We look at gold up there. We had a perfect pattern in the gold market that we've been talking about all week long at 1879. The high was 1879 and a half. That's it. That's correct. That's what makes it a poison. But you could, Mr. Z saying, just in a different opinion. And you know what? 419 may be a good bottom. I don't know. If I look at it on a half-hour chart, it might be. I'm just looking at the daily. I love these markets too, Z, because, some people like chocolate cake, some people like white cake, and I like all kinds of cake, especially a la mode, which is French for ice cream. Okay, now, Larry, it wants to show the gold chart. White Shark, I don't have. If I try to do that gold chart, it's going to cause problems, I believe. But you know what? I will do this. Let me try it. And problems are my middle name. Hold on 1 second here, and we'll get this up here, and we'll see if we can get it up here. Where is it at here? All right, this is it, boys and girls. Let's see if we can do the thing. Here it goes. Here it goes, White Shark. Say your prayers, Hail Mary, full of grace. Keep the Mormons in second place. See if that popped up. Tell me if it worked. If it did, I'm going to be a happy boy. Shut the front door and raise her in. We'll be right back, hopefully with Stan Harley. If not, it'll be Shane Smullion.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Stan Harley is in the house. Stan, how are you doing?
Larry, I am doing just awesome. Thank you.
Good. Listen, I want to ask a favor of you. Tell all your friends back there in the East that I'm going to be doing a computer class on how to operate the basics of a computer. So that'll be starting right after the first of the year. It'll be a 30-second class because I have a big axe, and I take the axe and I hit the keyboard first and then the monitor, and then we finish the class. So I'm having difficulties again, as you can imagine, my friend. I didn't get any charts because my email system is down. But tell us what you're looking at, my friend. Any chance of a correction coming, even if it's more than just 3 days?
Well, I'm wondering if either you or the folks at TFNN can enable my share screen. It's at the bottom of my Skype window, but it's grayed out, and I'm not sure why it's not operative. But I do have a number of charts to share. The first one that I was going to share shows a 7-year cycle pattern in the major indices. What I have here is a chart of the S&P 500 going back to 1966. And Larry, every single high of import since February of 1966, every one has spanned on the order of a minimum of 74 months, a maximum of 94 months, with the average being about 84. The average is probably not the best measure of central tendency. The better measure is determined by regression analysis. I've done that, and it falls at about 83.3 months. Let's just call it 7 years for back of the envelope math. Every 7 years, on average, with a standard deviation of 6 months, we've seen a major cyclical peak in the market. Some of them, I'll just cite a couple of them: the February 66 high, the January 73 high, the August 87 peak, the March 2000 high, the October 2007 high, and so on. And my mathematical analysis indicates the next recurrence in that cyclical rhythm is due November 2021, with a standard deviation of 6.3 months. Well, wow. November 2021 is now.
Wow, it sure is. Wow, that's really good. By the way, we do have the charts are coming up in the Tiger Den, and they're also going to be on the homepage for TFNN. So just go ahead and keep telling us, because I can visualize what you're looking at, but these charts are available for the folks. So Stan, we've been doing this for a couple of years now, and this is the first time, only the second time. The other time was back in 2020, right before the big break. You were talking about a pretty possibility of correction. So this may be interesting to be watching, I guess.
Indeed.
Okay.
So what I'm doing is I'm looking at that, and then I'm looking at smaller patterns, Larry, to see if I can narrow this down within that 6-month window, that standard deviation window.
Okay.
And we have a significant clustering that lines up right around the Christmas time frame, a little over a month from now. That to me is very, very compelling for what could be a peak in that 7-year cycle. Unfortunately, I don't have the share screen capability today, but if I could show the viewers, one could see the Fibonacci and Lucas clusterings that are all lining up right around December 21, December 23, right within that time frame. From a larger perspective, it's also 21 months from the March bottom of last year, Fibonacci number. It's 89 weeks from the March bottom of last year as well.
Okay, wow, that's great. Now, Stan, if you do me a favor, when you finish this, if you will send the charts to Larry at tradingtutor.com. That's TUTOR.
Absolutely.
And then the folks that can't get it, if they'll drop me a note, I can just attach it and send it on, because those charts are you do a great deal of work, and I really enjoy seeing them when I look at them. Of course. Do you want to go ahead and continue with the next one?
Absolutely. The next thing I've done here, Larry, is I've looked at an interesting pattern involving the Nikkei 225 of 32 years ago. The Nikkei peaked in December of 1989, and one day the thought occurred to me, like sitting under the apple tree, and I got bonked on the head. Well, what if I were to compare the present time frame in the Dow Jones Industrials with the December 1989 peak in the Nikkei. And so I did that, and I put them on the same graph. Had to move them around a little bit left and right to get the manual fit, because the number of trading days in December of '89 on the Nikkei and the number of trading days in December 2021 are not exactly the same, but it's pretty doggone close, Larry. And that pattern nails the lows of October 4th, October 27th, the most recent low on November 10th, lines up beautifully. And it suggests that we're going to go from about 36,000 on the Dow, just like the Nikkei, up into 39,000, right around December 21, 22, 23, right in that time frame, if the pattern pans out true to form. And if we start breaking out of this sideways consolidation that we've been in here by tomorrow, Monday latest, that will be something I'll be watching very, very closely for what could be another history repeating itself.
Well, that'll be really interesting. I can remember December of 1989. I was in Southern California for it was actually New Year's Eve. I was there for a birthday and New Year's Eve party, and the Nikkei had just made a high, and it was not quite 40,000, and I had just written a paper about the facts that it was making this huge three-drive pattern. And of course, it did back off a little bit. In fact, it was down for 17 years. I think it was 17 years before it finally made a bottom down around 7,600, as I recall. So it was quite a bit.
It's never exceeded that. And another interesting thing, Larry, markets tend to reach major peaks right around the 40 mark, 39 to 40 mark. That number 40 is very common throughout human endeavors, whether we're talking about price or we're talking about time. Religious writings are replete with references to the number 40 and multiples thereof across multiple time frames. Of course, the Nikkei topped out at about 39,000. Back in 1929, our Dow Jones Industrials topped out at 386. Okay, that's just 14 points shy of 400. 40 and multiples thereof tend to be a significant glass ceiling, or on the time axis, they tend to coincide with major time sequences. In terms of price charts, watch the number 40 and multiples thereof. We tend to get significant peaks in that range.
Wow. Stan, let me ask a question. I know the folks that we're back where you're working really respect your technical ability, but a lot of those guys are hands down fundamentalists, aren't they? I mean, they basically look at the Fed and all this other stuff. Is that correct?
That is correct, and I've lived on both coasts.
I knew I was right.
I've lived the majority of my life on the West Coast.
Yeah.
Some people might call the left coast, but don't include me in that. But seriously, I don't know why, but the best technical analysis tends to come out of the West Coast.
Yeah. Hey, stay with us, buddy. You have another chart, right? We'll be right back with Stan Harley, folks.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks. We're chatting with Stan Harley. Stan, I have a memory question someone's asking us. As I recall, we first met more than, I think it was about 45 years or more, because we were in L.A. together. You were in Thousand Oaks. I lived in Westlake Village. And we, as I recall, we had these meetings once a month, didn't we? At either the Conti office or Investment Center bookstore. I don't remember exactly where they were. There were always about 30 people or so. You know, Joe DiNapoli would be there. Larry Williams would pop in. And that's when we first met, wasn't it?
Yes, indeed. Yes. I lived in Camarillo. I lived in Camarillo, Thousand Oaks in Southern California. You lived in Westlake, right down the road.
Yeah.
And now, that bookstore, yes.
Yeah, I remember that quite vividly. And it was the year around 76 or 72. Do you remember what year it was exactly? Because that's been so long ago, I can't remember.
Well, I wasn't there at the time. I was in college at that time. But it was in the 80s, the late 80s.
Yeah, because they continued them on until I think about 1992, and then people learned everything, and then he quit doing it. But I remember it was a nice group of people. Remember, folks, you don't know this, but there were no books about this stuff. I mean, there was very, very little, and the only way you could find them was at the Investment Center bookstore there with Don Max. So now everything's available. Sorry to interrupt you, but Mr. Z wanted to know that how we met and stuff. So do you want to tell the folks what else you're looking at, my friend?
Well, yeah, and I think the back then, the best collection of technical analysis material was housed by the Foundation for the Study of Cycles down in the headquarters in Irvine. You remember that?
Oh, yes, I remember that. Yes,
phenomenal play. And I was the president of the Market Analysts of Southern California for about 10 years there, and I got to meet just some awesome talent in the biz. And you spoke to our group several times and arranged for you as well to be on television on KWHY Channel 22 with Richard Saxton.
Oh, yeah, God, yes, that's a long time ago.
One time, indeed. Larry, another thing that I'm studying very closely, and I'm sorry we don't have the charts, and I just am challenged to find the reason why it's not working here. And I've been talking.
We'll get them to the folks. Go ahead. You're doing a great job. Next time, though. You're doing a great job. Keep it up.
The last time we talked briefly about a 94-year pattern in the market, and I'm fortunate to have been handed some data by the late Richard Mogi, who meticulously synthesized the Dutch, the British, and the American markets to produce a coherent S&P 500 from the year 1600 right through the present.
Wow.
And I might be the only one that has the data. And he put that together very painstakingly, took a long time to do it. And then very sadly, he just recently died from COVID-19 complications.
Yeah, I know. I was certainly aware of that.
And he was just a phenomenal gent in this business.
Yeah.
Great respect for Richard Mogi.
Yeah.
He left
you're in that same class, Bubba. So don't underestimate yourself. You are.
Thanks, pal.
You certainly are.
But long story short, there were tops in the Dutch market back in 1649, a peak in the British market in 1720, a peak in the British and the American market 1835, 1929, and the next pattern, and the sequence pans out to be about 94 years and multiples thereof, and it's due right about now. Ideally 2023, first quarter, but that cycle has about a 2-year variability historically. So we are in the heart of the envelope for a 94-year cyclical peak, and that's a major, major secular peak when it does occur. So is this going to be it coming up here in a few weeks' time? I don't know, but it's something I'm watching very, very closely. Very closely.
Well, as we were speaking, the NASDAQ has just rallied 150 points to make a new high on the year. So that in itself is an amazing feat. So very good. Hey, listen, my friend, I want to thank you for being on, and we'll have you on again soon. And I certainly hope that you'll be able to visit us again, probably right after the holidays. Would that be a possibility?
Anytime that works for you works fine by me, Larry. I look forward to it.
Okay. All right. Listen, thank you so much, Stan, and be safe. Have a wonderful holiday, and we'll see you after the first of the year. How's that?
Look forward to it.
Okay, you bet. Stan Harley, folks, the Harley Stock Market Letter, a stand-up guy and a really nice guy. Plus, he does know his stuff, so let's take a look at it. All right, let's move on here. We've got a couple of things going on here. I posted, I don't know if it popped up or not, just a wild guess of what the AI is showing today in the NASDAQ, which means it should be topping just about now, right here at 16,465. And we'll see if that's going to mean anything or not. One thing at a time, of course, as we go through these each day here, and that's all we can do. One other memory that I had of that meetings that we used to have there at the Investment Center bookstore is that I provided the refreshments because of I had a association with I Enjoy Bagels. There was a bagel manufacturer in West LA that happened to buy some soybeans on my recommendation, and he gave us free bagels for all that time. But then, fortunately, it was one of the lucky ones that I had during the time that I was going straight up. He didn't say anything because I didn't give him any recommendations on the way down. So that was a good thing also. So taking a look at that. Well, hold on. We got a question coming in here for one of our listeners here, and we've got Jeff from Philadelphia on the line. Jeff, how are you doing?
Hi, doing well, Larry. How are you?
Very good. What can I help you with, my friend?
We're short on time. I'll get right to the question. On the January daily oil chart, I have a question.
Yes.
So I believe I'm looking at the first ABCD that's completed in an uptrend. Well, a bearish ABCD first occurrence in a downtrend, which means, an uptrend, which means buy. But my problem is that it hasn't reached the 38.2 fifth retracement yet. So I'm thinking like buy because it's the first ABCD, but don't buy because it hasn't hit the 38.2 yet.
That's a very good question. You're going to have to decide which one you want to take. Hey, I go through this every day, Jeff. So, the question you have to ask yourself, how much do you have to risk between now and the 382? And that's a considerable amount, isn't it?
Yeah.
It's $2. That's $2 a barrel. So you certainly what I'm waiting for in the fact that the news has been so bullish on this and this thing hasn't gone up. I want to wait to see if it's going to make the 382. So I'll be waiting for around 75, 50 barrel in January is what I'll be looking to be a buyer at.
Right. Okay. Okay. Very good. All right. Thank you.
Hey, you were very lucky to get through today, my friend. You should buy a lottery ticket.
I know. I waited to the last second and then want to step on Stan Harley's toes.
No, not a problem. I'll send you $20 as soon as I figure out who's going to win the 5th race at Aqueduct today. We'll be right back, folks. We got to take a little break here. Thanks for joining us, Jeff, and have a happy holidays with you and your family, okay?
Oh, you too. Thank you. Great. Take care. Bye-bye.
Okay. Now, folks, those of you that didn't that want to get Stan's charts, email me at larry@tradingtutor.com if you want those charts. And that what I'll do is I'll send them out to you when he gets them. We'll be right back after the break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
Hello, am I back? Sorry, trying to put an order in. Hold on just a second here. Okay, Mr. Z's asking me, why did I leave Drexel to go to Chicago in '82? 2 reasons, Z. I realized that I was having some domestic problems, but the main thing, I was really bucks up. Man, I had a lot. And plus I had all the stock from Drexel and stuff, and I always wanted to try it, so I figured a break to Chicago would be good. I knew that these computers were coming and that I would be able to trade anywhere, at any office anywhere. I didn't know about the laptops and stuff, but I knew all the prices would come through, wouldn't have to use the ticker tapes anymore. I just wanted to make sure that everything was fair and copacetic in Chicago, and it certainly was. It was a great 3 years there. I met Byron Tucker, Leo Malaman, a whole bunch of great people, and it was really super good. I noticed that you posted in there about the Investment Center bookstore. Don sold that in 1999, I believe, for $2 million, and he moved to London, where he was originally from. The reason why he and I became friends, his mother was a diabetic, and I was with Eli Lilly, and she was having a hard time getting the insulin that she needed. And I picked up the telephone, and I called my friend back in the medical department, and I said I needed a favor. And they gave her a lifetime supply of insulin, and I got a lifetime supply of those books. And he gave me the Gartley book because of that. It was the original three-ring binder book. And I gave that as a gift to somebody else a little bit later. So that's it. We'll be able to see that. Listen, tomorrow we've got Ameritrade coming up on the next show. I want to thank you folks for being with me yesterday, and we'll see you tomorrow. Our guest tomorrow is going to be Dr. David Paul from VectorVest, one of Tom Hugard's mentors, and we'll be dealing with that and have a lot of fun. He's really, really good, as you know, and he's a terrific presenter. So let's do that. Live every day in an attitude of gratitude, and may God bless.